In this video, we're talking all about the US dollar index. We're going to discuss what goes into the index, the history of the index, and how you can use it every single day in your active trading to make better trading decisions. Alright guys, we are back with another video. For those of you that are new to the channel, new to the feed, my name is Austin Silver. I appreciate you being here. Do me a favor, make sure you hit the red subscribe button so you don't miss any of my trading videos. Today we're talking, like I said, all about the dollar index. We're going to talk about how it's applied to the Forex market, what moves the index, what makes up the index, maybe even a couple of changes that are coming on the index. And like I said last, we're going to wrap this video up at the end, showing you how you can use the dollar index in your active trading every day to make better decisions. So let's start at the jump. What is the dollar index? Very simply, it's a measure of the US dollar relative to a group of 6 other foreign currencies. Now, that's where we're going to talk a little bit about these foreign currencies. We're going to talk about maybe some changes that are actually coming in the future, 10, 15, 20 years down the line with this dollar index. But the index since 1985 has been maintained by ICE, the Intercontinental Exchange Incorporated. So like I said, there's 6 currencies that make up the basket of currencies that are being weighed against the US dollar. So within this basket of currencies, we have the euro weighing the most at about 60%, followed by the yen, followed by the pound, then the Canadian dollar. At the end, we have the Swedish krona and the Swiss franc. And that's where some revisions may be needed, because there are countries who we partner with, who the US is trade partners with, China, Brazil, Mexico, South Korea, that are actually bigger partners as far as like on the global trade scale, the global economic scale, than the Swedish krona or the Swiss franc, but still we aren't weighing China, Brazil, Mexico, or South Korea in this basket. So that's why there's a lot of talk on the internet, and I wanted to make sure that I brought it to your attention that in the future they may be trying to change the 6, maybe even adding to the 6 currencies that are weighed against the dollar in this index. But taking that back even further, just to the history of where this index comes from, it started being traded, it started being tracked in 1973 after the Bretton Woods system was dismantled. Then, like I said, ICE took over the exchange, took over trading, took over its entire exchange basically in 1985 as the dollar index futures started to begin their trading. Now, 2 notable points in time are the all-time low at 70.57 in March of 2008 during the economic collapse here in the United States. That was the lowest historical value of the dollar index, and the all-time high the same year that futures traded started trading in 1985. The thing that I find very interesting with this is that this year was the same year that we had Bitcoin futures start trading. So when I saw this statistic as I was doing the research for this video, I was like, so does that mean that Bitcoin may never touch that high again, just like the dollar index never has touched that high the same year that futures trading began? Is that a pattern? I don't know. We'll have to see. Now, you can also think of the dollar index as an inverse euro index. That means that because the euro makes up 60% of the weight, like I showed you earlier, of those other 6 currencies, Euro USD is going to be inversely correlated to the dollar index, which means that when DXY rises, Euro USD is going to fall. Just like when DXY falls, Euro USD is going to rise. Make sense? Give me a thumbs up if that makes sense. So now, taking that a step further about the movement, we've talked about now the dollar index related to euro pairs. You should also understand that if the dollar index is rising, it's going to push USD base pairs higher. What that would be USD CAD, USD CHF pairs, where USD, US dollar, is the first pair of the currency pair. So you can flip that and think that if DXY is rising, it's also going to then pull US dollar quote pairs lower. So it'll push USD base pairs higher and USD quote pairs lower. So Euro USD, GBP USD, XAU USD, any of those USD pairs on the back end, as I like to refer to it, that's going to get pushed lower as DXY is rising because the USD is on the back end. Makes sense? So here we can just look at a few charts. You see the almost exact inverse correlation between the DXY, the black line, and Euro USD. As Euro USD was falling here back in 2015, dollar index was rising. Almost identical here. We're looking at a weekly time frame just because I wanted to show you it over multiple years. You can see it's almost exact. Here, 2019, the value of the dollar has been going higher. The value of the euro to the dollar has been going lower. So you can see that correlation here. Also looking at GBP USD. Now, this is important to note. It's similar to Euro USD, but not identical. Each pair is going to be correlated a little bit differently to the dollar index. The closest correlation, though, is going to be in Euro USD. You can also look at gold, because people talk about gold all the time and try to compare the value of the dollar to gold. In my opinion, when you look at charts like this and you look at it over a long period of time, it's very hard to find a pattern to say what would drive the dollar up would then drive gold up or down. Gold kind of moves on its own, and that has other factors into it. We're talking about, other countries even playing a factor on the value of gold, where the dollar index is just an indicator of our currency versus the other 6 in that basket. So that's why I think gold sometimes can move off on its own. Now, we're going to move into the second part of this video, but to sum up everything that we've talked about before, just understand that if we're looking at US dollar base pairs, where the US dollar is the first pair, and we get good news on the dollar, for whatever reason, maybe Trump tweets something that the dollar likes even, whatever it may be that pushes the DXY higher, USD base pairs will normally follow in that direction. And just as that moves higher, it'll pull USD quote pairs lower. So now let me take it to the chart and show you how you can use the dollar index not only to help confirm or deny as you're trading other currency pairs, just using this on correlation, but you can also apply direct technical analysis to the dollar index to tell you where that's more likely than not going to move. All right, guys, so we're looking at the dollar index here on the daily time frame. First, you see I'm using green and red candles just to keep everything clean here. Now, for those of you that really follow me a lot, you know I like to trade with black candles. But when we're looking at anything but the Forex market, I switch over and use green and red. The reason for that being is because here in this market, looking at the dollar index, you can have gaps. And if your candles are black, it's hard to tell the difference if it's a bullish or a bearish candle because of those gaps. Now in the Forex market, because there aren't gaps very often, black candles are a lot easier to read. So here, we're going to look at the green and red candles. Now, I have no EMAs on, no TDI, nothing, except my support and resistance zones. If you haven't seen the video on how to draw support and resistance zones, I teach you the 2-candle rule, the same thing I teach in the course for free. So you can click that, I'll link it right above and down below, even in the description, so you can understand exactly how I draw these zones. Just to kind of keep this video rolling, I'm not going to go in detail on how I drew these blue zones. You can see that I boxed off the pins that are most important, but like I said, if you really want to take that deeper and understand what these blue boxes mean, click the link above, click the link in the description below, and you guys can check out the support and resistance training video too. It's on YouTube, it's free, you'll enjoy that. Going forward with this idea here with the dollar index, now that we've got the zones drawn, these are not support or resistance zones, and I talk about that in the other video. They're just price sensitivity zones. And what they tell us is that when price reaches that, market conditions are more likely than not going to change. So if you read this chart left to right, as we've been making an uptrend, a small uptrend here from 2019, where we started in January setting the low, we respected that zone and moved higher. It created another zone here, February, respected that zone and moved higher. It actually came back to that zone in February. It came back to it in July and retested it and moved higher. So these zones tell us a lot. If we break the zones, price should continue movement in that direction. If we test the zone, we know markets conditions can change. So here, for example, in July, as price started to drop and the market gets worried because of 3 huge red days, we know that as it approaches a zone that it's bounced off of before, we could see the market change conditions and come higher, and that's exactly what it does. So now going forward and applying it into our daily trading today, we just broke through a zone that was set here in the beginning of August. Today, we had some dollar news here at 10 a.m. that came out lower than forecast, which is pushing the dollar index down today. It's basically common sense. More often than not, when you have negative dollar news, you're gonna see the DXY fall. Now, someone in the comments is gonna say, Austin, I've seen negative news and the DXY goes higher. Like when 9/11 happened, the DXY went higher. I understand that. It's never going to be 100% of the time that's the way things happen. But understanding probabilities and using technical analysis, using zones like this, can help you say, look, let me read the fundamentals. What's news saying today? Are we going to expect positive news, negative news? Where are we at? Are we at a price sensitivity zone? Are markets willing to change conditions here because of that news? Those 2 questions are going to help keep you out of bad trade setups and help confirm if you should be actually trading those setups. Now, to take that a step further, using the dollar index to trade other currency pairs is very simple. Like I said already in the video, if you're trading, for example, Euro USD, if you see the dollar index rising, even on the 15-minute time frame, if you see the dollar index rising, or let's even make it more specific today, you see this huge news pin here, 9:30, going into that 10 a.m. dollar news. We know that the dollar news can impact Euro USD. So what we can do is look at the dollar and look at the euro to the dollar and say, what is this market more likely than not going to do? What I first would do is add in some EMAs so I can identify my trend. Here, we were in a downtrend now, we can see overnight, and then found consolidation through the London session into the New York session prior to that news. And what that basically tells me is that because news was coming, we knew that price was going to consolidate, and it does, right between that low set here, right at the end of the Asian session, to the high set here at the start of the London session, and it just chops in between. Knowing news is coming, we would wait. You would never want to trade into high impact news. We talk about that all the time. But we would wait to see, okay, I'm looking to trade Euro USD. I'm going to see how does the dollar index react to the news. Okay, dollar index was reacting negatively, coming lower. That means Euro USD is probably going to move higher. And that's exactly what it does. And now I bet if you watch this progress as the day goes on, more likely than not, it continues higher without retesting this zone that it was chopping between earlier this morning. Because what it did was it said news is coming, let's collect our orders, and once news is done, however the dollar is going to move on that, it's going to move Euro USD opposite. So because the news was negative and it pulls the dollar index down, Euro USD goes higher. You can even, if we want to be really advanced, take this a step further and use a TDI to help identify divergence so you can think 3 steps ahead. And I know this is a lot, but if you can do this, you can say, look, news is coming, I can see divergence, right? I can see where this market could be setting up. I could see where this market could be setting up for some rise, and now all I need to do is wait to see if the dollar index reacts to the news, and if it does, that will tell me how to trade a pair like Euro USD. The final question I know a lot of you guys will probably have for me is, well, Austin, how do I use the dollar index to trade something like GBP NZD? The way that I would explain it to you is this: because neither of these pairs are correlated to the US dollar, neither of them, it's GBP and NZD, I wouldn't rely on the dollar index too heavily for my analysis here. And I know that's not what a lot of people will tell you. They'll say you can still use the dollar index because it drives the currency markets. I'll disagree with that. I'll respectfully disagree with that. I'll say if it doesn't include the dollar, I wouldn't rely on it to even 50% of an extent. I would look at it, analyze it, and see if it even tells me anything at all. But what would the dollar index dropping have to do with GBP NZD moving? Yes, the dollar index and the dollar are traded the most every day in the Forex market. I understand that. But what directly? You can't really tie them together because there's no direct correlation as there is when you're trading a USD base pair or a USD quote pair. So for pairs like GBP NZD, CAD CHF, you don't have to worry about the dollar index as much. But still keep in mind, and I've talked about this, like I said earlier in this video and before, high impact news. When high impact news is coming on the dollar index may move, the dollar pairs may move, and that can shake your trade. So not trading into those high impact news events is very important, and also not relying on the dollar index for pairs like GBP NZD is another important thing. But just keep the focus on the USD base pairs. If news is good, dollar index is moving higher, USD base pairs will follow. If news is bad or dollar index is moving lower, USD base pairs will follow. Quote pairs will move opposite. They're inversely correlated. So that's how you guys can start using the dollar index in your everyday trading. I hope you learned something in the video. I want to also let you know that the video is sponsored by Audible. There's a link down below for 2 free audiobooks that I know you guys want to take advantage of. One Good Trade, Mike Bellafiore, Trading in the Zone, Mark Douglas, Ruth Barons Roosevelt, I couldn't think of her name, 12 Habits of Highly Successful Traders. Too many books for me to name. I could even start rattling some off the top. But make sure you check the link below. Go get your 2 free audiobooks on me. I appreciate you guys watching through the video. Like I said in the beginning, make sure you're subscribed, and I'll see y'all in the next trading recap.